so let's hit up our first question here. So Irshad, he put in a question for us. He says, and we know this, Irshad, because we've been following your journey too. He's a longtime Fearless member as well. Bought myself a property in Moncton in September 2020. 180K with 20% down. Current mortgage on the property is 130K. Market price is 300. Whoop whoop.
Yeah.
Good job, Irshad. Let's say that Joe wants to joint venture on this property. How much does Joe have to pay me to join? And what should I be paying from the rental amount to him? Okay, so how does it basically, the question is, how does it work when we want to joint venture a property that we already own? So, how does it work?
Okay, well, ultimately, that's entirely up to you, Irshad, as to what percentage you want to give up and how much cash you want to to bring in, I guess. So it's completely up to you. If you want to give away a 1% share of your property and it costs somebody $10,000, you have full right to do that. If you want to give away 95% share of the property and they pay you $290,000 and you keep a small share, you can do that. So it's just kind of, what do you want to gain from it? What is the purpose of somebody joint venturing? Are they going to be doing any work, or are they just going to be doing joint venturing as a money partner and just putting money in? It'll be passive for them. So there's so many different factors that are involved in that, but ultimately it comes down to, if you could, let's say, pull out 100,000 and use that 100,000 because you have another good opportunity in front of you that you need 100,000 for, and you have a purpose for that money, well, then maybe you can give a higher percentage because that money can be put to good use. So it kind of just depends on your situation, Irshad, and what you're wanting to do with that money. That will determine how much of an equity stake, how much of a monthly cash flow stake, mortgage pay down that you would end up giving up to a potential partner. So
the basics of the strategy, guys, just for everyone who's looking at this as a strategy, the basics of it is you establish the value of the house at today's value, not just by saying, oh, it's worth 300K, but by actually getting an appraisal or very, very well done CMA by a realtor. Okay, so you establish the price of the house, and basically the idea is that you will share any value that it goes up, any pay down that it goes down, and any cash flow that comes in from here on in. So again, it depends. You can have someone come in and give you back your down payment, so put the 20% down that you paid on the 180, or 20% down on the 300, let's say, gets them in. You're going to carry the mortgage still. Do you offer 40%? Do you offer 50%? Depends on, when you throw that number into an analysis and look at it, like the property analyzer that we had in boot camp here, Shad, you probably still have that still. Throw that in there and, look at it, or the calculator on investorlife.com will do that for you too. Look at the numbers, and as you change them, a 40% split or a 30% split, does it look good? Do you think you could sell that to an investor? Does it look fair? Does it look like something someone would want to invest in? So as for cash flow, there's a few ways you can do it. You can say, like, okay, we're going to start, like, let's say you're making $500 a month in cash flow, but you want the cash flow. So you can say, well, I want to keep the cash flow. I don't want to split that, but because of that, I'm willing to offer 50% of equity instead of 40%. So you can kind of give and take. Or you might just say, yeah, I'm willing to give $250 a month in cash flow. I think that's fair and I don't need the cash flow. So, and I'll do a 40% split or a 50% split. Whatever is working, right? It's going to be somewhere in those numbers probably. So you establish the value. Anything after that, you guys can share. Cash flow wise, how much do you split? It depends on what they need and what you need. So as always that we teach, when you're working with other people, you always ask them what they need. Try to find their problem and fix it. So whoever you're talking to, ask them what they're looking for. Do they want cash flow or not? Do they want, equity? What's their plans? What are they doing this for? And then see if you can tailor your deal to kind of fit them. If anybody is looking for that kind of a strategy, you can definitely joint venture on property that you already own, the benefits to someone else. That is one
of the best strategies to get going. If you already own one investment property, you know what the numbers are. You're not guessing what the rents are going to be, what your expenses are going to be. It's an easy property to offer out, especially if it has a mortgage on it. Then your investor doesn't have to qualify for mortgage. All they do is give you money and they get a share. And it's pretty simple.
And that helps
Great way to get going.
It helps you because If
now
you're
you have
first-
the money to go buy another one.
You have another, yeah. So now you own 150%, right? 50% of the first one that you owned 100% of before, and then 100% of another one that you can then do that with. But the benefit is you've got actual numbers, not projected numbers. Everything that you can present to someone, and that gives you a little more confidence and them a little more. So especially for your first ones where you need a little more confidence, yeah, they can work awesome.
So I think we should just hit a couple of the questions that are in the chat. Going back a little bit, Scott Canal put in a question, is an 8% return on investment good? So, I mean, it depends on perspective. Scott, for those that are doing private lending, 8% is okay. It may be good. For those who are investing in their RRSPs and mutual funds or just leaving them in a bank account, 8% is amazing. So it just Depends, not pretend.
It pretends.
It just depends on your perspective and who you may be talking to. If it's you that is looking to invest your money, you can determine whether 8% is good or not. Obviously, the higher percentage that somebody may offer you or you may be able to attain usually comes with a higher level of risk. So my way that I would answer the question is 8% return on investment good depends on the risk involved in that investment. And so that's what you need to weigh when you're looking at any investment.
I would also say it depends on what you can get otherwise, because, you know, lots of us, I know I don't have much stomach for unsecured investments. I like my stuff to be secured. And so, you know, what's out there? What are the going rates at the time? And what have you been doing to date? If you've been getting, you know, your 0.34% on your RSP lately, well, 8% sounds pretty darn good. So it's all subjective really, but yeah, good points on how to figure that out. So good question, Jessica. My question is, in addition to info about average sale price and average rent or estimated expenses, that kind of stuff, what research would people normally do to make a sound decision for an investment out of town or out of the province that they're living in? So awesome question, Jessica. There's so much to consider when you're working, you know, when you're buying out of your area. So there's a couple different kind of angles to go from. One would certainly be, you know, you want to look for the economics of the area. Is that an area of growth, or is that an area of, you know, non-growth? Is that somewhere that people are moving to or moving from? Are there jobs being created there, or, you know, are people leaving there to go find jobs? So those are some, you know, good questions economics wise that just kind of tell you the basics. And what you want to compare that to is that smaller area, could be a town or a city, compared to its provincial rate, let's say. Or if you're looking at a province, what is the province doing compared to the country? And that kind of gives you like the subjective comparison. So there's that, but then there's also stuff like the intangibles, like, do you have a team there?
Very important.
If you don't have a team in that place, no matter what the economics are doing, it can be going crazy. But if it's, you know, being ruined by tenants or sitting vacant forever, or, you know, you're chasing for money, or you're not getting paid, and you're a year away from finding out if the courts will even, you know, prompt you to pay.
What are the tenant laws like there? What are the, you know, like exactly what Tiff said. If you don't have a team, let's say you buy a really good property at a really low price and really high rent, all the numbers make incredible sense. But there's one property management company in that town or that city, and you know, there's one plumber, and you know, there's one realtor, or very few choices. Then you can get yourself into a little bit of trouble if you have issues with some of those contractors. And it is an out-of-town property and maybe far away from you. So you want to make sure that you have a strong team and you have choices. It is a good thing to think about when you're looking to invest elsewhere.
And you know, if you want to touch base with some of our Ignited members that are investing from afar, like Andrew Hong, he's investing, you know, in the Maritimes from Ontario. We've got Dwight Newell, Melanie Robinson, Ryan and Ashley Ackroyd, or I guess they're not really, they're investing, they're the boots on the ground part. Hermel Benoit, he's from, you know, from Vancouver, investing afar. Amy Lamb, she's from Northwest Territories, investing in Alberta. So yeah, that's lots of experience that you can definitely learn from.
And you know, that's a good question to think about, because sometimes, guys, where you live may not be the best place to be investing. Your numbers could be way better elsewhere. So if you do have the proper team in place, or you do have contacts there, you can get a much higher return. So it is worthwhile investigating other areas where the returns are the best. That's where you want to look.
Adrian, I have two more questions. One, do you or anyone watching, and I think this is definitely going to be, if we've got people watching from out east, this is something that is very prevalent out there, so we'll rely on our Eastern experts out there. Do you know the ballpark monthly savings for changing over from oil to natural gas?
I have no idea. We have never done that.
New Brunswick, Nova Scotia.
Always been natural gas. Actually, a house my mom used to live in had an oil furnace, and they did not change it. I don't know why. Maybe there was no natural gas where they were. But yeah, I don't know what that would be. So
that's
maybe
really
somebody
rare for here.
Very rare.
Like that's the only time I've ever
kind of remote
like, what is
spots
this?
would have just oil. Yeah.
So all right.
The second part of her question.
Second question. Yeah.
Recommended websites when researching potential areas to develop. How to know if it would be a good spot other than a good gut feeling?
Awesome question. No gut feelings.
Ties in with the answer we were just giving, but we definitely like actual websites. So, you want to go to the town, let's say the town that you're looking to invest in, and go to the town website. When we were in Nova Scotia last year, we put an offer on a couple of properties in Pictou, Nova Scotia. And we just happened to stop there one night and we started looking around at real estate, and man, we were like, okay, let's do something. But we went on the town's website just to see what is happening economically in the area. What kind of things are being created? Are jobs being created? Is the population growing? What's happening with real estate prices over the past several years? And you can start to just get that from the town, the provincial website, and just start to learn a little bit about what's going on. That's a great place to start.
What you can do is you can search, like if you're looking at a specific area, you can search up let's say it's a town, and then economic development. So they usually have an economic development officer, economic development office. Sometimes their city or town website will have, investor relations, and then under that is economic info. Basically what you're looking for is someone who's in charge of bringing investment and bringing money to the area. Most towns, even small ones, will have someone that's kind of in charge of that. So that's what you want to Google. So if it was Pictou, New Brunswick, Nova Scotia, then, I guarantee you I went on the website and said, Pictou, New Brunswick, or Nova Scotia, Economic Development Officer.
We actually contacted him and had a conversation about what was happening and how open they were to, development, how open they were to building and creating
investment properties. Which, by the way, they were not.
And all of those sorts of things.
Which is why we did not buy there.
Yeah, we didn't end up buying.
Nothing to do with the numbers.
Yeah.
Everything to do with the town council and how they were running and their mindset around growth. So that kind of stuff is pretty important too. Okay, how to find realtors in other countries.
How do you find a realtor somewhere else?
In Mexico or Caribbean. Okay, so that was the question. So first off, before we go to how to find the realtor, a couple of cautions. So for one, make sure if you're investing out of country that you know the laws and the rules of the taxes between your country and their country. Will they, for example, we have some friends that have, $300,000 sitting held in the US right now, that's been there for 3 years and it's just being held until the tax situation can be figured out. Canada and the US are supposed to have a tax treaty. That shouldn't necessarily happen, but it does. So first off, check out taxes and what that all is going to mean for you here in Canada and in that country. Secondly, you want to make sure that when you are investing in a place like the Caribbean or Mexico, are you investing as an investor, numbers only, or
this is a tough one.
This is a tough one. Or are you investing for personal use? And so really you need to figure it out. Are you being emotional? Are you being an investor? Which one is it? Because this question is a good one.
And both are okay if we understand what we're doing.
Yeah. So, for example, this question, if it's in the Caribbean or Mexico, and then how do I find a realtor? Well, it depends on whether you're finding a realtor for personal use or investment use. Because as we always preach here and anywhere else, you need a realtor. If you're an investor, you need a realtor that specializes in investment, and the large majority of his business or her business is in investments. So That's the first thing is the taxes, okay? Tax laws.
Make sure you understand that.
Secondly, what are you buying for? Is it for personal or investment? And then when you're looking for a realtor.
Yeah, I mean, there's certain questions. It doesn't matter where. It could be in Canada. It could be elsewhere. It could be on the other side of the world. It doesn't matter where. When you're searching for a realtor, you want to interview them. You want to have a good feeling that they're going to be looking after your best interests. You want to check out whether they're, what kind of paperwork they're having you sign if you are going to be working with them. But like Tiff said, what is their experience? They could be a #1 realtor in a certain city and sell a ton of homes that are maybe $800,000 plus, but you're looking at a $200,000 townhouse. Is that something that they are going to be interested in helping you with? Or it could be vice versa. So you really just got to interview your realtor, make sure that they're on the same page with you, that what they sell is what you're looking for. The business that you're looking to do, whether that's investment or whether that's personal, that is the business they are in. Do they have access to properties that aren't on the regular MLS open market is another good question.
That tells
to ask
you that
them.
They're well connected.
Are they well connected within the community? Do they have a team? So if you are doing an investment property, do they have property managers and do they have contractors that they can, will you get their Rolodex of people when you work with them?
So
and
important.
after you're done the purchase, are you going to be left high and dry, or will you have the support afterwards? So those are all the types of questions that I would ask a realtor if I'm looking to work with one.
I would also personally, if it is, let's say that you're thinking of doing like a short-term rental, okay? So it could be Airbnb or it could be anything, but basically like a vacation-y kind of property that you would like to rent out when you're not there. So we know over the years, we know countless, like literally cannot count how many people we know that have invested in properties in different, Caribbean locations or hot countries, beautiful countries, all that stuff. I have yet to meet, and I did ask a couple times in Fearless over the years, hey, has anyone actually made money at this? Anyone? I would love to talk to you and profile. What did you do? But what I would be doing is I would be asking that realtor for other names of other clients from Canada that have been investing for at least 2 years, not it's in build stage and in a couple of years it will be ready and then they're going to find out their numbers, but have, it's built, it's done, it's been renting out for the last 2 years at least. How's it going? So I met the property manager, they seem really nice and they got my first tenant in there. Great, that's good. But that hasn't stood the test of time. So I would be asking myself for references from Canada, people who've been investing in that type of STR for at least a couple of years. Can I talk to them? How is management going? What are the numbers? Is it actually coming out as you had expected or hoped it to, or is it a little more, a little less? Just, eyes wide open, go in that way. Supply chain access, absolutely. Tenancy regulations, if there are any. All of that stuff is so important.
Yeah, so before you go in and plop down a lot of money in another country or another part of the world, make sure that you're talking to others that have done the same thing. Not just the person selling it to you, but somebody who has been sold to and hopefully had some success with it for a decent period of time. Mm-hmm. So you really got to do your research to be able to find these people. Maybe it's on Facebook groups, maybe it's elsewhere, but don't just go in based on hype. Don't go in based on emotion. I mean, how many of us travel to other parts of the world and, check out what real estate is worth and maybe look it up and start thinking, hey, well, maybe I could do something here. It happens to us no matter where we go in the world. But the question of whether it's an investment or whether you're buying that because you want to use it is a really good question to identify and lock down before you proceed with anything.
Yeah. Awesome. All right. Last question, guys. This is Sharon Boyd. Hey, Sharon. So Sharon, you said, I heard you say in a webinar that the 100 properties, I'm going to read it, that the 100 properties that you and Corey purchased, you were the property manager for all of them. Yes, I was. And that is why I am a crazy person. Okay. So if anyone wonders why I am the way I am, I blame it fully on property
management. Don't have your wife be a property manager, guys. Come on now.
Please, can you tell me if all these investment properties that you manage were in the same city? And what city do you live in? And in the city? Yeah. City. So I'm assuming you're saying, were they in the same city? Yes, for the most part. Okay, so other than a couple of them, yes, they were in the same city. So what city do we live in? We live in Edmonton, and all of our properties were in and around Edmonton. Not because that's where we live, but because at the time of our buying, that was the number one place to invest. It has super strong economics. It certainly did what it was supposed to do. You know, the market doubled in a short period of time, that kind of stuff. All of that is why we bought here. And yes, it was all in the same, let's say, 45 minutes to an hour drive range as a maximum. So, and yeah, I definitely managed all of those properties for all of that long. It was lovely. So yeah, all right, guys. Take care, guys. Cheers.
Have a great night, everyone.